even more hawkish, because you just want to hunt the investors, because that's how they use the term. So so good morning, good afternoon, variable traders. This is a video from my hotel in Dubai. This is actually not Dubai. This area is called Dubai Marina. There is actually a cruise line here. I don't know if you can see, there's a cruise park, and that place is a football club zone or something that you can actually watch the games over there. I watched the Iran versus USA, the soccer game. It's really cool actually. There are two different stadiums that you can see with high quality screens, and that big thing is that round is like Eye of Dubai. It's like London Eye. And you're gonna have a really beautiful sunset, very beautiful sunset. The weather is amazing. It's really the best time, so you're definitely gonna come and check out Dubai, especially if I'm living here. You can come and hit me up, and you can come and maybe stay at my place and have fun. Let's see how it goes. And this is not just the main Dubai, this is just the marina. The real Dubai is actually in the back. Alright guys, good morning, good afternoon, depending on where you are on the planet Earth. This is Andrew from Variable Traders. I'm gonna do the recap. I'm in Dubai right now, and over the weekend I'm gonna go to Italy. And if you are in Italy, in Florence or northern Italy, let me know for a meetup. We already have 2 traders for the meetup. But trading wise, it was a really good day. I had one bad loss on Marvel, but I had really good trade on XPEV and Tesla. So let's just start from the concept of recaps. So I got a lot of good feedbacks on how to do the recaps. So I try to make it more educational, that rather than just mishmash of over trading or something that is not useful, because we can either do the recap every day and force you to watch it, or we can just do it every once in a while but make it very educational for you, so you don't have to see it every day if there's nothing really to talk about. But today I think is a good day because we can, there were a couple of really nice trades that it's worth doing a recap, but maybe I do it a little bit less if I really don't have anything to share, or if I don't have a good day. I just don't do the recap. Originally, I did the recap every single day because I wanted to show you the truth and goods and bads of trading. But now maybe if there is anything educational, maybe we can do that. So one thing that I wanted to talk about is, why I got into trade, and what I saw that I really liked in the trade. So XPEV is a trade that I did really good today on it. Yesterday was a very choppy day, but the day before was an amazing day at the end of November, November 30th. So we traded that. That was one of the best trades that I had in this year. The day after, so December 1st, gap down, it was kind of choppy, and I didn't trade that. I didn't like the volume on it. But today I had a very amazing day. Somebody mentioned that in the pre-market. I just put it in my watch list. Unfortunately, I didn't look at it in the first 2 minutes, but it really had a nice run up in the minute number 7 or something. So it would have been an amazing 5-minute opening range breakup. The volume is there, the order flow is up there, stock was up 13%. So everything was there for a 5-minute opening range breakup. I missed it, unfortunately. So what I saw here, and what I liked was that every pullback was completely being bought up. So you see, this drop completely, but even didn't reach to the 9 moving average, completely came up. So that's why I jumped into the long at 11:30, and I got out of it quickly because I didn't like that I'm chasing it. Went up and it dropped, and I saw that as soon as this drop came down, it eventually came back up. Every drop is being bought back up, and that's a really bullish pattern, that every drop is being bought back. People are buying the deep. So let's take a pen. Let me just. So anyway, I don't know. My computer doesn't work, so. All right, I don't have the Epic pen. But anyways, so as you see, that's why I just jumped back in there, added more, and popped up at 1170, and then I added more for the break of 12, and I stayed in there, and as you see, it still is going up. It might go actually go to 13. Came up, touched the 9 moving average. I went long again, 1170. I added more actually on that, all the way up to 26, 12, 67. Did I add again or no? No, actually, I didn't add it. So it's gonna go up to 13. So this is extremely extended on a 5 minute chart, but still every pullback is being bought back up. This is a very strong stock, and all the ABCD patterns that you're seeing here is just all these pullbacks are being bought back up is in like an ABCD pattern. So it's a very nice trading. So what you're seeing here is just this is an ABCD pattern, and then this was a very interesting candlestick for me that this drop was completely bought back up. So that's why I went long again, ABCD pattern. And again, this is a very nice pullback to the 9 moving average. I added more, and now we're going up. So there's a really good chance that we get into the 13. And if I see a huge ask here, so that's a really good sign. If asks are stacking up, that's a very bullish sign. But in this trading day today, we didn't see a lot of asks here, but still the pattern is very bullish. And on a 5 minute chart, we're having higher high and higher low, higher high and higher low, except this one that didn't make a high, but still we're higher high and higher low. So this is a very bullish pattern. I think it's kind of extended now. There's a good chance that we're pulling back a little bit, but it's probably mostly the whole day is going to stay strong. Tesla was a trade that I did 2 trades on Tesla, and I'm still in there. So Brian went long Tesla, did a really nice 1 minute opening range breakup. Pullbacks are being bought back up again. I added on a pullback, went up red to green, and then I got a stop out at the break even. Ignore this one. This was a hotkey mistake, and then it came back up above the VWAP. I added more again, and went up again. So the concept of risk to reward. So when I went long here, the stop loss was just below the VWAP, and I'm already at 3 to 1 risk to reward. So that was a really nice thing. So the market overall today dropped because the job market was still strong, and investors are concerned that the Federal Reserve is going to increase the rate because the job market is still strong. But it's kind of recovering today during the day. So that's pretty much it. And I had one bad loss on the Marvel at the open that I jumped in too early and I got squeezed. But other than that, I had a really good day on XPEV and Tesla. So Brian, how was your trading day?
Yeah, no, it was good. As always, I look for opportunities to short stocks that are gapping down on news, not just general market. Just not general market gap downs like we had today. But Marvell reported last night they didn't report good numbers, so market was punishing them, and they looked weak going into the open. So I just shorted a little bit before the open, and then added to the position at when it popped up a little bit to 42 at the VWAP, and then it really dropped hard. Almost got down to 41. I think it got to 41.01, but I covered a lot of it on that first drop, and then it came back up and squeezed. So so I had to stop out of the rest flat, but I'd taken a fair amount off, so it turned out to be a really good trade. Overall, that was probably my best trade. And then of course Tesla, you already talked about. It just started to show some strength. As soon as it got through the VWAP, I went long on it, and then we took some off at 194.80 and over 195 when it broke out there. So overall it was a pretty decent day, and I've traded XPEV a bit with you. So it was a okay day.
Yeah, it was a really okay day. So what happened? What the market was at 8:30, the job market came in, and this huge drop on SPY as you see at the pre-market. And the bad news is good news for the market for now, and eventually everything is going to get back to normal. So bad news is bad news, and good news is good news. But the Federal Reserve, the U.S. Central Bank, is increasing the rates, and the cost of capital is going to go up. And they want to do that until they cool off the economy, just lose a little bit of job, and the inflation comes down. And then after the growth really stays, maybe next year, the whole year, they start lowering the rate to push the economy moving forward. But until then, the inflation has to come down. If the job market is still strong, it means that they're giving it more room to the Federal Reserve to be more aggressive. That's why the words dovish and hawkish in the Federal Reserve's coming. The hawkish means like a hawk, hunt the investors, because they're aggressive. they're increasing the rate. Dovish is just they're giving investors more money. Seriously, that the name of the dovish and hawkish are coming from that. It's actually a very very well-known term. So the Federal Reserve is very hawkish, and now with the good economy, they can be even more hawkish. Because you just want to hunt the investors, because that's how they use the term. So so anyway, as long as the job market is good and spending is good, they can become more hawkish. Because they want to reduce the inflation. If the inflation comes down to 2% target, what they do is they look at the growth, and if the growth is not enough, they reduce the rate to push the economy and spending and credit markets. But right now their focus is inflation, and not only inflation, but also there is another concept called anchored inflation expectation, and that's more important than inflation, because what they're trying to do is if they're not really aggressive now, then everybody is going to anchor their mind into 7% or 8% or 10% expectation. And everybody starts increasing just by default. And they don't want to do that. They don't want to really quickly bring down. So that people don't anchor their mind into just, yeah, obviously 10% increase is normal every single year. So that's called anchored inflation expectation. So not only inflation, but they want to make sure that it just doesn't become a norm, that people start increasing their prices and companies and everything just increase the 10%. So that's why they're really aggressive, and they're really hurting the stock market and bond market right now. It's just because they want to control inflation expectation, not only inflation itself, but people should really remember that inflation is going to be 2%, not 10%. Anyways, so that's it. So thank you so much, guys. And so from now on, right now when I'm on the road, it's a little bit difficult to have good content, create the contents on these laptops and these portable screens. But from now on, I try to do the recaps a little bit more educational than just, hey, I did this and I made that much money, blah blah blah. So try to be a little bit more educational. So the quantity is not that important, quality. So we try to focus on quality. But thanks a lot for all of the feedbacks, guys. Thank you so much, and have a good day. So I'm in Dubai, and I'm gonna be in Italy over the weekend. And if you're around near Milan, just email me, and then we can have a meetup or something. Have a good day, guys, and have a good weekend. Ciao.
See you. Wow.